U.S. central bank officials will hold interest rates unchanged for now, citing a slowdown in hiring last month and ongoing developments in the global economy. Among the concerns, a British referendum next week that could potentially see the UK withdraw its membership from the Eurozone. Mel Arcega reports.
After 2 days of meetings in Washington, members of the Federal Open Market Committee did what many analysts had been expecting, with Fed Chair Janet Yellen announcing no change in the federal funds rate, the rate it charges banks on overnight loans.
Today, the Federal Open Market Committee maintained the target range for the federal funds rate at 1/4 to 1/2%.
The rate has been at record lows since the end of the Great Recession to lower borrowing costs and boost hiring. But given the recent slowdown in hiring and a so-called Brexit referendum next week, a vote to decide England's continuing participation in the Eurozone, Fed officials believe the most prudent course was to wait for the storm to subside.
Clearly, this is a very important decision for the United Kingdom and for Europe. It is a decision that could have consequences for economic and financial conditions in global financial markets.
But some say the Fed squandered several opportunities to raise rates this year. In the event of another economic meltdown, Bankrate.com says the Fed would have few policy options available. Bankrate's chief economist, Greg McBride, spoke with VOA on Skype.
The Fed needs to raise rates a couple of times here. They need to get, restock the cupboard a little bit so that they have something to serve up the next time the economy slows. And, sort of waiting for that perfect patch of weather to raise interest rates, has brought us to the point where we're now the middle of the year and they haven't raised rates at all.
Some economists say 2 rate hikes are still possible this year. But National Association for Business Economics' Ken Simonson told VOA that a contentious U.S. election could become the next complicating factor.
It certainly makes it more difficult because any move in the 2 or 3 months right before the U.S. presidential election would be interpreted by many people as trying to influence the election outcome.
The last time the central bank raised rates was in December by 0.25%. Analysts believe the next window may be in July or September or December after the U.S. election.